Hello and welcome to today's webinar. A little housekeeping before we begin. Everyone is muted during the webinar. All webinars will be recorded and sent to all attendees after the webinar has concluded. Tomorrow, the recorded webinar will be sent to all participants. There will be a Q&A at the end of the presentation, but please feel free to ask questions during the webinar by clicking on the Q&A box at the bottom of your screen. Once the presentation concludes, I will ask the questions presented in the Q&A box. I may not get to everyone's questions, but we will do our best. With that being said, I would like to introduce you to Ruben Franco, President and CEO of the Orange County Hispanic Chamber of Commerce.
Thank you, everybody, for being on today's call, and thank you to our partner, Experian, for doing this. The Hispanic Chamber of Commerce has been around 35 years. Next year will be our 35th anniversary. We're here to be a resource for small business throughout our county, and we couldn't do it without partners such as Experian doing what we do. So we're also here available with our small business development program, and that is a program that we do provide at no cost to small businesses looking for funding, looking for help starting a business, growing a business. And I am pleased to announce who we have on today's call. We have Craig Russum, who is our lead finance consultant from our Small Business Development Center, who leads our finance center. And also we have Veronica Herrera from Experian. And Veronica will be going first, giving us a rundown on credit, and Craig will be joining us after that, talking about how we can still get financing in this COVID difficult time. So Veronica, I'm going to kick it off to you, and thank you very much for the partnership.
Absolutely. Good morning, everyone. Edna, do you have the presentation up? I'm not seeing it.
Give me just a second.
Okay, sounds great. We'll have the presentation up. I'm just going to be in today's presentation. I'm going to be covering some of the basics of understanding and managing credit from a kind of a personal standpoint as well as a business standpoint. Sorry about the technical difficulties here. There we go. All right, I'm going to go ahead and so just so that you guys understand what my background is, I'm a director of product solutions within our decision analytics team at Experian. My day job is essentially to work with clients, so banks, credit unions, and all kinds of lenders, and I work with them to set up their strategies using our tools, scores, attributes, and the like. So I'm very, very involved in the credit cycle. It is what I do all day long, basically. But the other part of my job is also to educate consumers on their credit, right? So having kind of a back view to this, I learned a lot about how credit is created, how it's reported, how lenders use it. So I use that expertise to help consumers understand what's going on in the background. And so that's kind of what we're going to be covering today. Next slide. Just very quickly, I do need to read this disclaimer, the legalese part, so just give me 1 second here. The purpose of this presentation is to help you better understand credit reporting and to provide general information about how you can manage your credit report so you can get the credit that you need and want. For legal reasons, I cannot discuss issues specific to your personal credit report. I cannot advise individuals on how to improve their personal credit report or credit scores. I also cannot submit disputes regarding your personal credit report on your behalf. Information regarding Experian policies and process is current as of the date of this presentation, but may change. Essentially, I don't have access to your credit report. Okay, I can't make changes for you. There are ways that you can make changes, of course, and we're going to discuss that. But for the most part, what we're going to be talking about is, in general, how credit works and what you can do about it. Okay, next slide, please. So the first thing we need to start off with is a couple of definitions, because I found that most people have a confusion between credit report, credit scores, and debt, right? So the first thing is credit and debt are not the same thing. Credit is the ability to obtain goods and services using extended terms, right? So you're basically getting a loan for something, but debt is the amount that's owed. You can have credit without having debt. And by the way, not all debt is bad, right? Having debt that you can't pay, that would be bad. Too much debt or payments that you can't make, falling behind, that sort of thing. But debt in itself isn't a bad thing. It's managing that debt. So when we talk about what credit is, it's having the ability to get loans, to get terms from all kinds of institutions. It could be lenders, banks, it could be suppliers, it can be utility, rent, all sorts, insurance, all sorts of companies that require credit. And essentially what credit comes down to is it's your financial references. It is a history of all of your credit transactions that are recorded at the bureaus, so that lenders, when they're trying to make a decision as to whether or not they want to extend a line or start up an account, can understand how you pay your bills, right? What is the overall history of your credit? But do understand that if you, for example, wanted to have credit and no debt, you simply would pay your bills off at the end of every month. Then you would actually you wouldn't owe anyone anything. But you would still have credit, and building credit is very, very important. Next slide. So the way the process works is, excuse me, every time you have a relationship with a lender or a servicer or anyone who's extending some kind of line of credit or has an account with you, those companies will report to the credit bureaus your standing, whether or not you paid on time, information on that account, how much you owe, what your balances are, all that information that I'm sure you're familiar with if you've seen your credit report. And that information is being housed at the credit bureaus like Equifax, TransUnion, and Experian. We house that information, we organize it so that when another lender or vendor or somebody needs to look at your credit report, they can do so and see your history. So essentially, they are checking out your data. They're like very much like a library. They go in and check out the information that we have at the credit bureaus, but it's only if they have permissible purpose under the law. So you can't just willy-nilly check somebody's credit report. You have to have a permissible purpose for it. For the most part, permissible purpose for lenders are when you, as the consumer, actually give permission to the lender to check your credit report. It's in the application that you are signing. So when you're signing up for services, you're signing up for a loan, you're signing up for a line of credit, or for whatever request that you are making, in the application you are giving them permission to check your credit, to take a look at your credit, and then once you've established, thank you, once you've established a relationship with that lender, you will see, they have that permission to continue to check your credit. Other people that are allowed to check your credit, besides the accounts that you give permission to, your employer. In fact, when you apply for a job, it's in the application as well. For some types of employment, credit check is required. For insurance, for example, whenever you apply for insurance, they will check your credit as well. You can also, other groups that are allowed to see your credit, federal courts, through a subpoena, that sort of thing, you would also, we would have to give them a copy of your credit report. But probably the most common is you. Each individual is allowed to check their own credit, right? That wasn't always the case, by the way, but through the FACTA Act, FCRA, consumers are not only allowed to look at their credit report, you're actually given the ability to pull your own credit report for free. And we're going to talk about that in a little bit. But we encourage consumers to check their credit, to check it often, make sure that all the information on your credit report is accurate. You might have heard that the information on credit reports is highly inaccurate, and that is not actually true. There can be errors, of course. Transmission of data can lead to errors, but we rely on consumers checking their credit to correct some of those errors through the dispute process, and we're going to cover that in a bit too. Next slide, please. Okay, so when I talk about a credit report, I am talking about the collection of all the information that comes from creditors. So that, again, can be utility accounts, it could be rent, it can be your cell phone, it can be your auto loans, mortgages, student loans, credit cards, everything that you have. Essentially, we are keeping a record of the information that lenders are providing for us. When I say credit report, credit file, or credit history, I mean the same thing, right? It's just how you view it. It is that record of information that is stored for you so that other people can take a look at that credit history. You can take a look at that history and see overall how you take out credit, how you pay back that credit. That's very important. And the reason having a credit report is so important is that it's how lenders make decisions. And it's not just about credit cards and mortgages and auto loans. It's about signing up for cell phone service, right? Or any kind of utilities or insurance. So it is important to have a good credit history, because if you don't have it, most likely lenders may or may not actually extend credit to you without it. But usually, if you don't have a really good history, you might not get the best possible terms. So having a good, strong credit history will allow you to have the better terms, lower interest rates, longer periods of time, more extension of credit, and the like. So it's definitely something that you want to do. Next slide, please. In a credit report, you may have seen yours from multiple sources. They all look very different, but they all contain the same basic sections. They always start with the identifying information. This is your personal identifying information: your name, address, a social security number, telephone, and place of employment, that sort of thing. It's only used to identify you, to make sure that we're pulling the right credit report. Lending decisions cannot be made with what we call this header information, or this identifying information, which means that regardless of how old you are or where you live, that is not going to be pieces of information that are fed into credit scores or into decisions. The next section, the account information, that's the part that's being used for credit decisions. The account information is the bulk of the credit report, and it lists all the different types of accounts that you have. And it'll be a record of everything that you've even had in the past, including closed accounts or older accounts that you have. It has the name of the lender, the type of loan that it was, and all the information about that loan, such as the balance, the credit limit, and very importantly, whether or not you made the appropriate payment on time, or if you were behind, and ultimately how that account was closed. So for example, if you paid it off or closed it, that's totally fine. But if you didn't pay it, we would also record things such as charge-offs, collection accounts, bankruptcies, and things along those lines. The next section, the bankruptcy public record section, this is information that's not reported through the lenders. It's actually reported through the court. So if you were to file a bankruptcy, the court would then report that bankruptcy to the three bureaus. And the final determination of that bankruptcy, if it was applied for, would also be recorded, as well as any accounts that were included in that bankruptcy. Bankruptcy public records are never good. Obviously, they will drop your score significantly. It's not something that you want to have on there. And they do tend to stay on your credit history for a lot longer than other items. So you want to be very careful about public records. The next section on the credit report, inquiries. We have to, by law, record anytime anyone sees your credit report, even you. We record anytime anyone takes a look at it for any purpose. Be aware, though, that we separate between soft inquiries and hard inquiries. A soft inquiry is when you're looking at your credit report, or your existing lender is looking at your credit report. Those are just kind of peeks into your report to make sure that everything's kind of going okay. They do not count against your score. People think that anytime an inquiry shows up on your credit report that drops your score, that isn't the case. Only hard inquiries. And a hard inquiry is when you are applying for an account or trying to open some kind of loan, the lender will submit a hard inquiry. Those, if you accumulate a lot of them in a short period of time, those can actually affect your score. Generally not a lot, but they can drop your score a little bit. But the soft inquiries do not affect your score. Pre-screen offers, account review, when you check your own credit report, those are all soft. You can have as many of them as you want on your credit report. You will see them, but no one else does. So don't be too worried if you see a lot of inquiries on your credit report, especially if they're the soft kind. And then finally, at the bottom of every credit report, you will have your dispute information or instructions. It is actually easier than ever now to go through and clean up your credit report, make sure that it's error-free, and it'll tell you exactly how you can submit disputes. And there are many, many different ways. You can do it by mail, by phone, directly on site. It's a fairly painless process. It can take up to about a month to get any given situation resolved completely, but for the most part, a lot of things are actually handled fairly quickly. Next slide, please. A couple of things that I want to mention, that things that are not on your credit report. And again, this is an area where some people do not understand that, what's on and what's not on a credit report. So anything that's a criminal background from the courts would not be on your credit report. If you file a bankruptcy, that is on there. But if you get a ticket, if you go to jail or anything like that, does not show up on your credit report at all. Neither does your medical information. If you fail to pay a medical bill, you might get a medical collection on your credit report, but it doesn't have any kind of medical information. In other words, it doesn't say what the doctor's name was or what you went to see the doctor for or anything like that, what happened at a hospital or anything along those lines. It only talks about the bill itself, whether or not you've paid the bill. Buying habits and transactional data are also not found on your credit report. So we know what your balance on your credit card is, but we don't know what you actually bought with it. Income is not on your credit report. It's a lot of people are surprised to hear that, but it is not recorded on your credit report at all. Neither is your bank account information. So checking, savings, money markets, any of those kinds of investment accounts, that's your money. That's not a loan. So it does not show up on your credit report at all. So do be conscious of the fact that if you are using a debit card as a credit card, a lot of people do that, you are not building history. You are not building your credit using a debit card. And it is because a debit card is actually just a plastic version of your access to your checking or savings account. So it's not a credit extension, and it's not on your credit report. And finally, another thing that's not on your credit report, believe it or not, are your credit scores. We calculate your credit score the moment someone needs it. It's on the fly. We pull your credit report at that time, use the information to calculate your score, and then present it to you or to the lender. And then that's it. It's not stored anywhere. And the reason it's not stored is because credit scores change. There's no reason to keep it. If I wanted to determine your score today, I would pull your credit report today and get your score. If I wanted to do it again tomorrow, I would pull another credit report and calculate your score. Generally, from day to day, things don't change very often, but they can. Your credit score tomorrow could be different than it is today. So there's no point in keeping it. Next slide, please. One of the things that I would like to kind of discuss real quick, just so that you know, you may have seen it on television. I know that these ads are out there. There is a program through Experian called Experian Boost. You don't have to use it, but it's something that's available. Essentially, what Experian is doing is it's allowing consumers to actually impact and to add more credit history to their credit reports. So you might know that a lot of utility and telecom, like cell phone companies, they don't report your good payments. They report you only if you are late. And that doesn't seem very fair, of course. So we found a way to have a consumer give their permission so that we could see your regular good payments towards your utility and telecom companies. That actually can help boost your score. It can help fatten up your credit history, especially if you are new to credit, you have a thin file, a young file, or just you don't have a lot of credit history, going through Experian Boost, which is, by the way, completely free, can actually help improve your credit history. It can improve your credit score. Generally, we see anywhere between 10 and 15 point boost. Of course, it completely depends on your credit report. Another feature about the Experian Boost that I want to mention is that it's completely driven by the customer, the consumer, okay? Which means you can add it, and if you don't like it, you can take it away. It is totally up to you. It's only with your permission. At any time, you can revoke the permission, and all that information will be removed. So, you're definitely in the driver's seat. Again, no cost for this. It's not a requirement, but it is something that is available to you. Next slide, please. We talked a little bit earlier about what to do if there's something wrong on your credit report. And in a moment, I'm going to tell you how you can access your credit report for free. But once you get it and you review it, we really need your help to understand and make sure that everything on there is correct. So if you see an account that is not yours, if you see any kind of information that is not accurate and true, we will give you the ability to fix that information. Just because, for example, an old address shows up, that's not an error. Remember that a credit report is a history. So we're going to have not only your current address, but we might have up to 3 or 4 or 5 old addresses. Those old addresses aren't errors. It's just that historic element that helps us identify you. So take a look at your credit report, check to make sure that everything on there is actually yours, it's accurate. And if you want, respond back to correct any errors that are on there. You can dispute directly online. You'll have a website where you can go. You can do it by telephone. If you wanted to, you could do it by mail. That takes a little bit longer, but you can do it. Just be very specific about what the error is, what the error should be, what needs to be cleaned up on the credit report, and give the agency about 30 days to go back to the original lender, get anything cleared up, fixed up, and then check again to make sure that error has been corrected. If you are determined that the error was actually an error. Next slide, please. As I mentioned before, the process is essentially if you submit something that's fairly simple, you can probably get it resolved immediately. But if you're saying that an account is not yours or that a lender incorrectly marked you as late when you actually weren't, those disputes can actually take a little bit longer because we have to then, once we get your dispute, we have to go back to the lender and have them provide proof. Right? They need to show us that what they're reporting is correct. If they find that it is incorrect, normally what they will do is they will resubmit a file to us and correct it. At that point, we'll let you know that the file has been corrected. You can go back in and check. That whole process, though, can take about up to a month. So don't expect it to be instantaneous because, again, the file does need to be resubmitted. But do check after a while to make sure that that information has been corrected and updated on your credit report. Next slide, please. Some questions that we always get: how long does information stay on your credit report? Well, if you have an account that's in good standing and it's still open, it will stay on indefinitely. It can be on there for as long as that account is still open. After you close an account, or an account is naturally closed because it's already paid off, they will stay on for 10 years after the closing, and then they will eventually fall off. They will be purged after 10 years after it's closed. The good news is that anything negative, such as a late payment, a missed payment, collection account, and that sort of thing, they have expiration dates. So if you missed a payment, it will stay on because it is a history. It will stay on your credit report, but it will only stay on for 7 years. When it is purged, it is gone. Okay, it's not somewhere in the background. It's actually removed from your credit report as if it didn't happen. So there are ways, even if you've had some trouble and had some negative, reportings on your credit report, and you fix it, of course, you might notice, well, why does it still stay on there? It's because it's the history of it that stays on there, but it will eventually drop off. I did mention before, though, that bankruptcies in particular, especially Chapter 7 bankruptcy, those actually can stay on for longer. They can stay on for 10 years. So it's definitely not a good thing to have. But even a bankruptcy will eventually completely fall off your credit report. And those credit inquiries, those hard credit inquiries, they only stay on for about 24 months. They are gone much, much faster. So when you see your history, you'll notice that they only go back 2 years because credit inquiries are purged after 24 months. Next slide, please. Switching gears a little bit over so everything we've talked about so far is credit report, right? The actual credit report. Now we're going to switch to credit score. And those are two different things. The credit history or the credit report is a record of all your history. A credit score is an algorithm. It is a tool that lenders use, excuse me, to quickly summarize all the information that's on your credit report and establish a propensity to default. That's all a credit score is doing. It's looking at your history and saying, what is the likelihood, given this person's history, what is the likelihood that they're going to default on a loan? And default is defined as going 90 days or more past due on an account or charging it off. Basically, the lender is not getting their money at this point, and they're going to have to write off that loan. So they want to know for any given consumer, given their history, are they very likely to default and bail on this loan, or are they very unlikely? The higher the score, generally, the better your chances are because it's showing a very, very low likelihood. Your propensity to default might be minuscule, might be like 0.1%. That's a very low chance that you're going to default. Whereas somebody with a very, very poor score, 300, 400, 500, their propensity or likelihood to default on a loan could be up as much as 50%. Very high chance that they're going to default on a loan. And so your score is lower, and then a lender may decline that loan because there's just too much risk involved. But all of that is calculated by running algorithms on your credit report, looking at everything, right? Looking at what kind of accounts you have, how much outstanding balance, have you been late before, have you charged off or filed bankruptcy before? Those are all things that point to people who may or may not who most likely will not be paying their bills in the future. So those all are things that affect your score. But a score in general, you probably are very familiar with them. FICO's been out for like 40 years now. Vantage scores out there, but all lenders have a variety of different types of scores from all three different bureaus. There's no such thing as one score, by the way, just so that you know. People say, oh, what's your credit score? I would say, well, which one, right? There are many different scoring models out there. Each of the bureaus have multiple credit scores. FICO has like 50 different credit scores that different lenders use. So there's no such thing as one score. When somebody says, what's your score? You have to kind of determine for what, what is the score that is being used? That will be your score there. Next slide, please. The important thing about a credit score, the fact that there are so many, how do you manage it, right? How do you fix your score if you don't even know which score your lender is using? Well, in this case, it's risk factors. In order to understand how to improve any given score, you need to receive that score, but you will also get in that same kind of communication, whether it's a letter or it's on the screen, whenever you get your credit score, you will also get something called risk factors, or they're sometimes called adverse action codes or score factor codes. Basically, for every credit risk score, you will get the 4 top reasons why your score was impacted, what is lowering your score. And fortunately, they are in hierarchical order. In other words, the first reason, the top reason, is the thing that's impacting your score the most. The second one, second most, third, etc. So anytime you want to know how to improve your score, you need to look at these factors, these descriptions of reasons why your score is lowered, and essentially do the opposite. So if the score factor code says you have a late payment on your credit report, you need to go and get that account up to current. If it says you have an unpaid collection account, well, then you have to go and pay that collection account. Or sometimes it might say something like your credit history is too new. In that case, you just have to wait. Those are things that, as time goes on, your credit history gets older and thicker, which is always better, by the way. But sometimes it'll still say something as simple as your balances are very high compared to your limits, right? Your utilization, you're using your credit cards you're too high, too close to their limits. A quick way to improve your score then is to pay down those balances. Just essentially look at those factors, do the opposite, go back, check your credit score again, and you will see that over time, those scores will start improving if you simply address those 4 top risk factor keys. Okay, next slide, please. Just so that you know what are the things that impact scores, I'm giving you a Vantage score example here. There are other scores. FICO has its own little wheel. All the different models have their own calculations. But overall, most credit scores run on the same principles. And what that means is that most of your score, a good chunk of your score, is going to be dependent on your payment history. In other words, do you have any late payments, any charge-offs, any bankruptcies? Do you have anything on there that could be affecting your score? If you have a pristine credit report, you paid all of your bills on time, you've never been late, then this is going to strongly impact and boost your score, right? But payment history is very, very important. So if I was going to say, how do you take care of your credit score? You make your payments and you make them on time every single time, because even one 30-day late can seriously impact your score. But the reason I want to show you the circle is that even though payment history is extremely important, it isn't the only thing that's important. Other things you have to worry about are things like utilization, your balances, how many accounts you have. The thicker, the better. The longer your history, the better. When it comes to utilization and your balances, the lower, the better. But having your credit lines, how high are your credit limits? In your credit limits, the higher, the better. So just remember that there are many things you have to do in order to keep your credit history good. Always pay your bills on time, of course, but also make sure your utilization is low. Try to keep your balances as low as possible, keeping your credit limits as high as possible, and quite frankly, having a good depth of history, good records. You're never going to have a fantastic, perfect score if you only have one account on your credit report. Okay, you need to show variety. You need to have that history. Next slide, please. I mentioned before that there is a place where you can go get your free credit report every year. Actually, that's something I'm going to talk to you a little bit about right now. So normally you can get your free credit report from each of the 3 bureaus from annualcreditreport.com. The website is right there on the screen. You can get it every 12 months. However, because of COVID and the CARES Act, the 3 bureaus have decided that until, I think it's the end of March of 2021, you can actually go and get your credit report from that same site, one free one every week. And that's because obviously a lot of stuff is happening right now. You need to be able to go back and check your credit report with more frequency. So we're giving you a free credit report every week until the end of March of 2021. But after that, you will still always be able to get your free credit report once a year through each of the 3 bureaus. Just go to that website. It'll ask you some information to authenticate you. And most of the time, you will be able to see your credit report right on the screen immediately. I say most of the time because sometimes if you answer the questions wrong or something like that, they might ask you for additional information that you have to send in. But for the most part, it's pretty quick and you can get it done straight on the internet. Next slide, please. As I mentioned before, because of COVID, there's going to be one free it's through April 2021. And the reason you're going to want this is because if you're going to be asking for an accommodation, remember that through the CARES Act, consumers that are having trouble paying their bills because they're impacted by COVID, you can call your lenders and make arrangements to have what are called payment holidays, to defer your loans, to go into a forbearance. But what you don't want to do is just not pay, because that will definitely affect your credit score and your credit history. But if you go into a deferment, what they basically do is they set your scheduled payment, the amount you're supposed to pay, to 0. So you can't be late, right? So if you don't have any monthly payment and you don't make a monthly payment, they cannot mark you as late. So it is very important, though, that you reach out and talk to your lender, make these arrangements. There are multiple ways that you can help protect your credit during the COVID period of time. And the reason we're giving you access more frequently to credit reports is so that you can follow up and make sure that those changes are actually being made on your credit report. Okay. Next slide, please. And I apologize, I'm going so fast, but we do want to get, I want to give Craig a chance to talk. I want to flip very, very quickly to say that a business credit report is different than a personal credit report. It looks alike and it kind of functions in the same manner, but instead of being on you, it's on your business. So you might be a sole proprietor and you might have, ABC company. You could have a credit report for the company. The company is the one that actually has the credit history, or it can be you. The reason I want to make this distinction is because, especially when you are a sole proprietor or you just start out in business, you most likely will not have a credit history for your business. I recommend that you get it started, of course, but in many cases, if you are looking for loans or lines of credit or agreements with vendors and suppliers, they're going to, if you don't have a business credit report, they're going to ask you as an individual to be the guarantor of that loan. That loan will show up on your personal credit report. So until you build your business credit report, these loans will actually show up on yours. But the idea is you should be building your business credit history as often to help protect your own assets. You want to make sure that your credit report isn't as impacted. You move it over towards your business. Next slide, please. So as I said before, they are not linked. They are not related. The only reason that they are kind of associated is that in many cases, you might be asked as an individual to be the guarantor of a business account. If so, you will see that business account show up on your personal credit report. It will be marked as a business account, by the way, but it will still impact your credit report in the sense that if you are late on your payments, you default on that loan, it will actually affect your personal credit report. Next slide, please. A lot of questions we get is how do you establish a business credit report? It's basically you have to, the creditors and the suppliers are going to be providing that information to the bureaus. In this case, Experian has a business division. Dun & Bradstreet is another one. You need to actually establish yourself as a business entity. So you need to incorporate or form an LLC. You need to get your federal EIN number. You will normally need to open an account, a business account, and have separate lines that are different than your own personal accounts. Have them in the business name. With this kind of information, you can actually open up a credit report for your business. Next slide. Oh, we are done. I apologize. I did go over a little bit, but hopefully, Craig, you will still have some time to cover your topics.
All good, Veronica. Good stuff. Thank you very much. Appreciate that. And if you have some questions, please use the Q&A function in the webinar to send us any questions, stuff that we can answer here directly. And we'll get started here. We'll talk a little bit about credit. Again, hi, good morning. Craig Resson from the Orange County Inland Empire SBDC, the Small Business Development Center. I'm part of the finance team that's hosted at the Hispanic Chamber of Commerce. So thank you, Ruben, and the Hispanic Chamber for hosting our team. We are a select, dedicated group of consultants through the SBDC network that our primary focus is the finances of your business. And more specifically, we help our consultants and our clients work through debt financing for the company. It's not always the right choice. Sometimes it is. Some businesses may not be ready for debt financing. Some are. So it's just part of that process. So today I'm going to talk a little bit more about that process, what it looks like, and how our team can help you make that determination if debt financing is right for you, whether or not you actually qualify right now. And then ultimately, we'll help put you on a path to debt financing if that's the case. What makes us unique is that we are not brokers. We don't act as brokers in this capacity. We are business consultants that just happen to specialize in the finance sector. And so unlike a business broker or a loan broker, our focus more is helping you through the process and helping you understand what that process looks like, helping you tell the story about your business, and then ultimately making that introduction to a lender. Because we're not compensated by any of the lenders at any time, we're just paid an hourly wage as business consultants. We're able to act a little bit differently than your usual business loan broker would. So please, this page that I'm showing here is our website. How can you reach us? Best way, there's a 1-800 number. You can always schedule an appointment with us. I'd say within 48 hours, 24 to 48 hours, we'll give you an appointment with one of our consultants. So whether it's one of our other 100 plus business consultants or the finance team directly, Steph will be sure to get you to the right place. Other notables on our website that I wanted to share with you today are some of the workshops that we have at the SBDC. They're all no cost, just like all of our services are no cost to you. The big ones I wanted to share with you, a couple of ones, how to start a business. So I think there's actually a session today, and then also on the 8th. So those of you that are interested in starting a business, maybe you're already in business, but you're just kind of getting things rolling and you want to talk through some of this early stage items, this is a great webinar to go to. Popular course these days with COVID is the Webify. This is the second time we've run this course, and it's for those folks who, even if you don't have an existing online business, or maybe you do and you just want some more information or how to build out your online business. This course is a multi-day course that's actually going to take you from kind of idea to building the platform, to taking the pictures of the product, to actually posting it and selling online. You know, because of COVID, many businesses have had to pivot. And as far as debt financing is concerned, that's what we're looking at. You know, lenders want to understand the pivot of your business. They want to know where those revenue streams are coming from. And so taking advantage of online sales might be that area that you need to add or enhance. So this program has been very well received. This is the kitchen, SBDC Eats. So we have a team that's dedicated to restaurants or in the food industry as well. And then also I see on the 9th, we have some accounting for startups. So if you're looking for some accounting information. So a lot of great program that happens here at the SBDC. So please take advantage of those free programs. Also, what's popular on our website, we have some COVID-19 relief updates and resources on here. I do a webinar at 3 p.m. every Wednesday where I talk more about PPP, idle, access to capital. I'll have lending partners on, strategy this time of year. So in December, we're talking a lot about strategy and what does PPP forgiveness mean to your business? How do I strategize with the CPA as far as closing out 2020, which is, it's hard to believe here we are in December already. So these are things that we need to discuss. So you can click and register, again, free every Wednesday at 3 p.m. And I'll be doing them through the rest of December and then into January for sure. Another popular page is our local grant and lending program. So the SBDC has been fortunate enough to partner with a number of the cities surrounding Orange County Inland Empire to help them facilitate grant money. Through CARES Act, many of the cities and counties were issued CARES money, which they then pushed out in the form of grants to local businesses. Some of the cities have even gone as far as to now create their own lending programs that the SBDC and my finance team has been able to help facilitate. So, as access to capital unfortunately tightens, this is a great way that if you're looking for debt financing for your company, that you may be able to access some capital. So bookmark this page, communicate with your city, your local chambers and stuff, and see, if the city starts to consider, their own type of lending programs and how that might be rolled out. Okay, so all of this great information here from the SBDC that can help you as far as access to grants and other lending type programs. All right, so let's get into it. So again, Craig Resson from the SBDC. My background's in retail sales originally, specialty sporting goods, late 90s, early 2000s, so it's been a while. But I've been self-employed 20, 23, 25 years and moved to this finance sector in 2004. And today we're going to talk a little bit about what the finance team does, how we can help you, evaluate what debt capital looks like for your business, and then more importantly, how you can work then with a business consultant on other aspects of your business as well. Today, it's mostly about capital, though. You know, a lot of questions that I get today, it's understanding what capital is available. Because of COVID, you know, we're gone through 2 quarters. We're in our 3rd quarter now of COVID type business, right? And, you know, as we've spent through PPP and idle funds, our own bank accounts, and we've been using our own credit, you know, to finance our businesses, what options do we have out there? And I think that's why it's important for Veronica to go first to talk more about credit and what does it mean to you and how you utilize it. I think it's really important for you to keep track of your credit right now. Take advantage of, you know, once a week, you can sneak a peek in there and take a look to see how you're being affected with your personal use of credit, and also you know, access, see if you can't get access. I believe the business credit, Veronica, and you can chime in on that, is a little different. Annual credit report doesn't have business credit access, but there are other ways in which you can access your business credit. Maybe she can touch base on that a little bit more as well.
No, that's correct. It is a little bit different, and I can send you guys a link to where you can access that.
Great, thank you. So let's talk about, you know, what's out there. What am I seeing? What do I expect? You know, what's my crystal ball? EIDL, the economic injury disaster loan, which is coming directly from the Fed, surprisingly enough, is still available. If you haven't taken advantage of it, I suggest you do. It's one of the least expensive business loans that you'd ever obtain. There's no fees, 3.75%. It's actually available to nonprofits as well at 2.75%. So very rare to see a government program like this that actually has funds available for nonprofits. This date on here, I'm not sure why they picked it. For everything I'm hearing from the SBA is that this program is set to expire by the end of the month. So it's been ongoing since March, early April. It is about a 15-20 minute application. It has, you know, again, the least documentation that you would need to show as far as access to capital. What makes it unique, though, is that you don't actually ask for a loan amount. It's going to be based upon your financials. So most specifically, it's your gross sales pre-COVID. So before January 2020, in this case, so 2019 numbers, gross revenue minus your cost of goods, divided by times 6, essentially. So what they're looking for is about 6 months worth of operating capital is where their kind of simple math comes to. So again, directly through the Fed, there's no bank, no broker, there's no fees associated with it other than an interest rate. So if you haven't done it, highly recommend that you stand in line on this one and see if you can access that capital. PPP expired, so the Paycheck Protection Program, again, was an SBA-sponsored program, but it was facilitated through the lenders. Most of us as business owners know about it. The big question now is what do they do with the extra 130 million or so that's left in the program? The program expired in August 8th, and that money's been sitting ever since. Unfortunately, we see, you know, the Fed, they're starting to talk again, some movement out in Washington. Is there going to be that possibility of that, you know, whether you call it PPP 2.0 or 3.0, that kind of second bite of the apple is still unknown at this time. And as business consultants and advisors on this, I can't bank on it. I have to do my projections. I have to look at access to capital elsewhere. And of course, I'm going to keep an eyeball on this next round of PPP. They keep talking about it. Whether or not we're going to see anything by December or not, that'll remain to be seen. It sounds like the next 2 weeks is what's really going to be important to watch to see what happens out in Washington, to see if we're going to, what happens at additional funding. But so hold tight on that about PPP. Most folks are in forgiveness stage at this point. So if you have any questions about the PPP forgiveness, you can give us a call, send me an email, and we'll try and help you through that application. And because I know, you know, the lenders are not providing information. We have some guides. We have some information from a CPA group, so the National Association there of CPA, so we can try and help you guide through that process. SBA working capital, 7A 504, grants, micro loans, you know, purchase equipment. All of this is still available today. it's become harder to obtain. The process is still the same. So, and that's what we'll go through today. We'll talk a little bit about what that process looks like. And just so you know, I mean, I have lenders typically on every Wednesday with me talking through some of their programs. And just to highlight, two of them out there. This one here, the California Rebuilding Fund, is being pushed out by the state of California. So there's about 35 million or so into this fund itself. And the purpose, up to $100,000 in this loan amount. This is the web page, and be sure to get you a copy of that, so that you know where to go to. It's an online application process, but in the beginning, it's just a pre-application. They ask you about 16 questions about you, about your business, about how you're doing, were you profitable in 2019, and then ultimately they're going to get you paired up with a CDFI, or these community development financial institutions, to then complete the application. So they have, each CDFI has their own application process that then they'll qualify you, or go through that process to see if you qualify for additional funds through this program, through the California Rebuilding Fund. This just went live about 2 Fridays ago. So very new program. We're hoping to see more money get pushed to it. Nothing yet that we're hearing, but we'll see as the success of this program and some information comes out about it. Maybe we'll see some additional funding. So if you are looking for a loan, this could be another way to go. Otherwise, banks like TMC Community Capital, they recognize that that kind of $5,000 to $50,000 loan amount. Folks are just trying to, they've been pivoting. They're showing some revenue, but they just need to help close the gap. Or maybe you need to refinance some of those business credit cards that you've been leaning on, these last 6 months. This is a great program through TMC that tries to address some of those issues, some of that little shortfall maybe of some cash flow, and maybe we need to refinance some of the debt that we've been leaning on over these last 6 months. So banks are recognizing it. They're taking applications. And so how do we go about that process? What does it look like? Well, fortunately, most access to capital outside of the economic injury disaster loan and the PPP is relatively the same. And so we've created this lender checklist to kind of help guide you. And this is what you would work with one of our consultants, help to package and help you put this information together so that then we can organize it in a way and try and get it in front of a lender, then ultimately make that type of introduction. It starts with your credit report. Okay, this is what Veronica's talking about. It's about understanding you personally. Any lender, it's whether or not you're truly lended on, because it is your business, and if you've established business credit, it could help change the narrative a little bit. But ultimately, they're going to want to understand the ownership. So anybody has 20% ownership or more, what does your personal credit look like? How are you utilizing the history? It's not always credit score driven, which is good news. So companies like TMC is going to look a little more holistically at your business, at what you've done 2020. How have you spent the last 6 to 8 months here through COVID on a monthly basis? What do your financials look like? Instead of it just being credit score driven. So that's the good news, but they are going to want to take a look. The 413 is the personal asset statement. And again, this is about you personally, independent of your business. What type of assets do you have? And I have some examples here that we can share. Again, this is assets, cash, savings. Do you have a brokerage account? Do you own a home, automobiles, anything like that? And again, it's trying to separate you from your business. And then also your liabilities personally. This has nothing to do with the business. We'll capture the business information off of the balance sheet. And if you don't have one, again, our finance team can help you build that the balance sheet and show you what that's all about. Again, the 413 personal asset statement is just trying to get a snapshot of you as an individual. The 1919, again, it's coming from the SBA. We're not SBA only lenders or broker. We're not only looking at SBA only type of lenders. So whether there's alternative types of financing or even something like the California Rebuilding Fund that's out there, ultimately it's about putting the package together and then reaching out to the different types of lenders and seeing what's available. But I do like with the 1919 questions asked you to try and help you better understand or help us understand your business, the ownership structure, if you have an idea of the loan amount request that's in there, and then also some questions and answers. This gets into the bankruptcy side of things, like Franco mentioned, that would be on your report. Have you ever filed for bankruptcy? Has the business ever filed for bankruptcy? Are you involved in any legal disputes? Okay, things like that. This is where it would capture that type of information, and the consultants can help you through it. Besides those two, so now we're getting into, these top three are going to be all you personally, you as the business owner. Then we start getting into the business. Okay, how is the business doing? Did you file 2019 tax returns? It's a great place to start. What do your interim financials look like for 2020? This is a big question that we get today, given COVID. The question we usually get is, do I have to show a profit? And the answer is no. More importantly, again, it's looking at your business month to month. So, January. So at this point, I'd love to see through November if you have November reconciled. We want to see how your business approached COVID, how you managed your expenses. And then what I really like to understand is your revenue streams. Where did the revenue come from? What did your revenue streams look like pre-COVID? So if you have data from 17, 18, 19, for 19, was a banner year for many companies and stuff. So it's interesting to see what revenue streams looked like in 2019 and early 2020. And then how did you respond? Your brick and mortar stores, what we saw was this shift from retail transactional pieces in-house to an online platform, curbside services, right? It's interesting to track that because that's then now how the lenders are going to judge you. They're going to judge you based on that response and what it is that you've done to pivot. And so for me, this is really important exercise to go through to better understand your revenue. And we can help you kind of look through that. We have some worksheets that we use to kind of capture what your revenue streams used to look like, how they worked, are they still working, and what are we doing now in the future? Okay, so we can help you with that process. And then finally, capturing that data from the P&L. So your profit and loss statement, we want to understand what it looked like in January, February, and then we want to push all of this out. And amazingly enough, here we are in December, where we can do a projection. We can then even look into Q1 next year. What's Q2, quarter two look like for 2021? So we can help you build out these projections that then we can then share with lenders so that we can better understand what debt financing would mean for your business. I like to do these kind of with and without financing so we can see what that process looks like, or to see, what does an extra $50,000 do for your company? How does it accelerate the path to being, net positive? Do we hire more people? The Community Advantage type program likes to look at, were we able to add employees? Were we able to pivot to the company, and how are we ultimately going to service that debt? So all that information means our action items, what you would work with a financial consultant here at the SBDC. We would help you identify your revenue streams. We'd analyze the feasibility of those revenue streams. Okay, obviously we want to take a look at your expenditures. Have we been able to reduce them to try and minimize our burn? We want to extend our runway. And then ultimately we want to understand what sources of capital are available to you, and then look at what debt financing could mean to you and your business. Okay, so there is a process. It's not just the magic bag of cash. That's not what we're here to do. We're here to help you through the process. One, you'll better understand your business by the numbers, and you'll be better prepared as we work through COVID and into 2021 and develop a map for success. Okay, so best way to reach us, again, the 1-800 number. You can reach me directly. Russum at OCIESBDC.com. And be sure to make this presentation available to you as well. And please visit our website, and you can get all kinds of supporting documentation, schedule appointments directly, and find different ways to reach us. So if you have any, please use the Q&A. Otherwise, we're at, looks like 12:01. I was able to just run through that. So I do appreciate you being here this morning, and look forward to working with you.
Thank you, Craig.
On
Thank you,
and
Veronica.
Ruben. Thank you, Ruben.
Thank you. And thank you, everybody, for being on today's call. Please reach out to us if you need further assistance. Thank you once again to Experian and Veronica for your support and your partnership. And I hope everyone stays safe and healthy out there. Take care.
Thank you, everyone.